So we have our next panel. We've got our moderator sitting up front here, Enzo Villani, Managing Director at Transform Group. Why don't you come on up? And we've got our panelists. I see them in the room here. So Dennis O'Neill, founder and CEO of O'Neill Capital Advisors. Alex McDougall, General Partner, Bicameral Ventures. And Jay Oberai, founder and president of Synergy. Family offices, are they a factor yet? That's the topic of the panel. So Enzo, why don't you take it away? Let's give these guys a big round of applause. How you doing? Good to see you.
Great, thanks, guys. How are you? Alex. So, family offices. I did have some, I did see actually today that PitchBook has stated that the family offices have jumped by about 49% in investing directly into Reg D offerings, venture offerings, and angel investing, and deals in general. So they're not using hedge funds at asset allocation all the time. They're getting more and more savvy in investing directly. What I'd like to do is to, which I think is a really telltale, I'm not sure about the crypto industry yet. I'm still kind of like on the fence there. But what I think the way that we should start this panel is we should just kind of go through your backgrounds and then maybe give us your first thought on whether you believe that family offices are engaging, what are you seeing, or are they getting involved?
Sure. So my name is Alex McDougall. I run a venture capital fund called Bicameral Ventures, which invests in kind of the early stage equity positions of projects that are building back on top of the Aon platform. So family offices are super interesting because there's such a diverse group of offices. There's VCs, there's PEs, there's hedge funds, there's capital preservation funds. So it's almost hard to lump them all in together. I kind of think about two general things that differentiate family offices. One is that they have a shifting risk tolerance over time as generations and things change. And also that they have a heightened awareness for the reputational side of things. So they're definitely engaging in crypto, and I feel like the whole institutional thesis in general, November of last year, everybody woke up, but then when you're an institutional investor, you have to set a committee, you have to ask for allocation, you have to do all of those things, right? So we're kind of getting to that stage. So I think they're definitely engaging, and I think they're sort of reaching the life cycle of it, but it's going to be a pick and choose of what family offices make sense for this and where they invest, whether it's through hedge funds or directly. That was really interesting about the direct investment that's coming.
Great.
Hello, Dennis O'Neill, O'Neill Capital Advisors. My background is 25 years of investment banking, raised a couple of $1 billion in early stage capital. Primarily focused right now on family offices and institutional investments into ICOs and cryptocurrencies. And, obviously, as you were saying, it's, family offices are like 31 flavors. Every one of them are completely different. They all have their different areas of expertise or areas that they want to focus on. For them, probably the biggest issue that they have today is the regulatory issues and custodian issues. I think that if you look at the U.S. market, I think that is probably the worst market right now for family offices, only because that the well's been a little bit poisoned by the SEC and some of the news coming out of there. But where we're seeing significant activity in the family office community is out of places like Asia, Singapore, Hong Kong, even Malaysia and Indonesia, Vietnam, and Switzerland and Monaco. So I think that as this market evolves, as it matures, as the regulatory risks go down significantly because we have settled law, that it will see a significant increase in activity by the family offices.
Great, thanks. Jay?
My name is Jay Oberai. I run a family office called Synergy Asset Management out of Geneva, Switzerland. We run $2.5 billion, 150 clients, and I disagree with both of them. All family offices are exactly the same. There is no difference between any of these family offices. They do the same thing. They do two things. Basically, a family office is for private clients. It's not institutional. So when they take in money, what they need in exchange is trust. Clients give them trust and give them money. So the problem with them is that when they invest in something, a product, what they want in return is trust also. So most of the time they spend just covering their ass. They don't want to lose the clients, so they don't want to take any risk, so they will not go into invest long-term, high-risk investments. That's the business model. It's just simple. Charge a management fee, and that's all you get. So as far as I'm concerned, for the last 200 years, family offices have always been at the bottom of the food chain. They will invest last when it comes to technology, innovation, new things. They come in right at the end because they don't want to take any risk. However, I think this time is very different. Not because they're any different, the animal hasn't changed. What's changed is that the people above them in the food chain, whether it's institutional clients, governments, hedge funds, are scared of this new world that we're getting into. They got to get rid of the old fiat money and go into new things. And so, therefore, there's no one left at the top. Everyone else is waiting. So, and because what you guys have done in terms of blockchain all around the world, the average person is talking more about this new technology and blockchain than the institutionals are. So therefore, these average people are talking to family owners, and the family owners are coming to our office and saying, why the hell are you not in there? This thing has gone from 1,000 to 20,000, you idiot, get in there. So when they say that to us, we have no choice but to call up people like yourselves and say, hey guys, you have some ideas? Is there something that we can invest because our client wants it? So therefore, we've de-risked ourselves completely as family offices. The problem is that there isn't much investment from family offices currently into blockchain businesses and technologies. The reason for that is because you guys have not been able to speak to the family offices. There is a demand from family offices. They're dying for it. But because you don't know how to talk to them, you haven't been able to get the investment. It's like what I say about the hottest girl in a bar. No one really wants to talk to her. She's actually the easiest girl to get. All you have to do is like unbutton your shirt and take out your Ferrari key and go up to her. And you'll know if she likes you or not. Either she likes your hairy chest or she likes the money that you represent. But go to them. Go to these family offices and build those bridges and those links because the money is there.
Yeah, I need to respond to that. I mean, I don't know what family offices that you're talking to, but all the family offices that I speak to are very, very diverse. Typically, the family offices have made a significant amount of money in a certain sector of the market. It could be pharmaceuticals, it could be oil and gas. The only thing that they have in common that I've seen so far is that they all own real estate. And besides that, they are very, very specialized in where that they spend money. Now, it's not that they won't diversify it into other classes, but I will give you this, is that anytime that they see an asset class that is moving up significantly, most of them will sniff around, kick the tires, but after they miss a couple of deals, then they'll start writing checks. And we're starting to see these guys engage now because that they're seeing that they've missed some opportunities out there.
Great.
So it's FOMO. It's FOMO is one thing, right? Now, they are still asset allocating into hedge funds and venture funds with their 10-year holds or 5-year holds and all that stuff. But it sounds like they're also doing their own thing, and I guess the younger generations. I think someone actually pointed out here, the younger they're giving a little bit of the capital to someone younger in the family who wants to participate and maybe be one of the key investors of the family office on a single family office structure. You're more of a multi-family office structure, which is actually like an asset allocation. Really, it's a diversification strategy. So it depends on what type of strategy they're after. He's more of the banking guy. He's more of the venture guy. So I think you're all right. What do you think is the one issue that's holding them back from investing in crypto now?
It's kind of the other point that I mentioned at the start, the reputation side, and I think that was touched on as well. It's hard. I mean, it's one thing to go out when you're out in your social circle and say, I'm investing in Bitcoin. Because, okay, well, why are you investing in Bitcoin? it's very hard to understand or to actually explain kind of the investment thesis of it as a regular person.
Well, because it's going up 1,000%.
Exactly. And so that's an easy answer to do it, and that's one way to do it. But especially when you get into some of these secondary coins and tertiary coins and the shit coins, that it becomes very hard to kind of stake your reputation when it comes to money discussions. And because the family offices are so heavily aligned on the reputation side, so what I think is kind of key is almost reversing it on its head and starting with the business models and kind of the use cases of it. And whether there's not really that many good ones right now on the decentralized app side, we're still kind of at the protocol layer. Yep. So where we're trying to invest, and sorry to move this back to my fund, is kind of the layer 2 protocol, and then the first showcase dApp that builds on top of it. So give somebody a 2-sentence soundbite of what they're investing in that doesn't use the word blockchain, and teach them the bare minimum of what they need to know to understand why it's different than a centralized solution.
So they want to get involved, but you're going about it in a way that's less, hey, this is the hot market. You're going in and actually trying to explain to them what blockchain is.
Less even about what it is and more what's the end use of it and why is it cool to me. And that's kind of the model for adoption. It's you need to know the bare minimum of the next level below to explain the cool so what at the top. And I think that if you give people talking points, that'll make it easier for family offices to get involved.
So isn't it custody issues? I'm sorry, go ahead, please.
No, I was just going to say that you're right. It's absolutely true. You get Sheikh Mohammed's family office to invest in something, they all want to invest. Yeah. So it's a question of that trust and getting some of these family offices to invest. We're in fact looking at buying into, we are actually buying into a event management company in London that focuses only on family offices and markets to them all over Europe. They have 3,000 family offices that they work with and market funds. These are institutional Fidelities and others that want to market into Europe and Middle East. So we're buying into that company, and then we will go and take ICOs to those family offices. So being a family office ourselves, and we say we're investing in a couple of ICOs, then all the other family offices will sort of piggyback off that, saying, well, these guys are getting in, why don't we look at it too?
Okay. Yeah, I mean, a couple of the issues that I see, I mean, especially in the crypto space, is that number one is that I'm seeing a reluctance in the family offices wanting to lead the deal. But if you have a family office that'll lead a deal, or if an institution of a significant name or at least reputation, it's easy to get them to line up behind that. The second part of it is that they are relationship driven, and they really, really believe that they want a relationship with the management team. They want to be able to believe in the management team, and they want a management team with a track record of success and impeccable reputation, because obviously because of the reputational risk that they're concerned about embarrassing themselves or being part of something unseemly. And I think that the last piece of this is that because that they really don't understand, or they haven't evolved enough to really understand the dynamics of the tokens, that they're still looking at it as a private equity or venture capital investment. So, management team, stage of development. I'm not seeing any of the family offices that I know that are willing to do these seed rounds based upon an idea and a white paper. They basically want to see a great management team. They want to see, something that's developed at least as an MVP. And then third is that they'd like to see that they've raised some capital on their own so that they're not the only money in the game, typically, north of $1 million, so that they've at least had some cash and they can see what they've been able to execute as a management team utilizing their capital.
So the next question really is about what are the size of the checks if they are investing? Are they investing with fiat? Or are they investing with tokens? Are they what are they doing to actually invest? And how are they handling their custody and their wallet issues?
Sorry, what's a token? No, I think they're mostly, it's all fiat money at this point. So, and on the averages, they will never go more than 1% of a portfolio in total. So any one issue, ICOs, if they do invest in anything, it'll be at very, very small amounts.
Is that like $1 million, or is that like 250,000?
I mean, what I'm saying is that typically if they have minimums for private equity or venture capital at 5 or 10 or $20 million, they're doing probably 10% of that or maybe 20% of that. Sometimes they do it holding their nose because they believe they have
With
to be.
fiat.
But they believe that they can't miss out on the space and the risk, the opportunity risk, even though that everything doesn't make sense to them or they don't really feel comfortable with it, that they'd rather have at least some money deployed in the space than to possibly miss something big.
It's pretty simple. I just want to. If you've got 100% client's portfolio, out of that 100%, maximum 20 to 30% will ever go into alternatives. Alternatives includes everything that's not just pure equities, bonds, and cash. So out of that 20, 30%, they will never put more than 2%, 3% of that into cryptos. Never means the next 12 months.
So from your standpoint
could go to
as a
20%.
fund, so from your standpoint as a fund, though, are you like acting as a buffer for them? Are you trying to say invest in my fund and I'll watch out and I'll do the due diligence?
So definitely, and we're targeting some family offices for our next round of raising probably later this year. But for that exact reason as well, because our fund does focus on kind of the end business model, but to give them exposure to something they can understand and also give that buffer layer. But I was actually having another thought as well, that there's been a couple conversations that I've had about the challenges of exiting positions and whether that might make sense for that to be an area for family offices to play, to take kind of strategic exits from other early investors. So almost like a later stage PE model where you take something that's kind of been vetted by a trusted partner or a trusted capital firm that has already kind of done the diligence and looking to exit because it no longer fits their part of the value chain. So that might be something to explore.
Yeah, I mean, the one thing I realize is that they don't take, family offices don't take deals on cold calls or people that they don't know. I mean, every deal's got to be brought to them by a trusted advisor. I mean, everything's reputational, everything's based upon a relationship, and I haven't seen any family offices ever do a deal where that they didn't have a trusted advisor or somebody that they had a relationship with as part of the deal.
So so for the folks here who are looking for investors, for for token buyers, how should they get engaged with family offices, or what's the best approach?
I think the solution would be Michael Turpin. Yeah, I think Michael Turpin is the solution. He needs to build the next Fidelity for blockchain. We need to create an organization which filters, looks at, monitors, watches, researches, and for family offices and responsible for family offices. And if any of you guys want to build that with us, we would be really willing to do it. We want to do it. So, and we're talking about that in case. I think that's required.
Well, so I come from the actual institutional trading and targeting and actually IR world. So the investor relations, like we have databases that we've built because you can see via 13F filings that this hedge fund, they only invest in this, and this pension fund can only asset allocate this much into this type of stock. The problem with the family offices is that it's a black box. So I do think that they're much more picky because you don't know really, like they might like the color of the logo. I mean, I really don't know what they drive themselves on as far as their investment thesis because they only have one. So if you meet a family office, like, don't you want them pre-vetted? Like the token match, which is one of our events, that seems to really help because we pre-vet them. You're walking into a deal, you're walking into a boardroom, you're going to be there the whole day, and you're going to listen to 21 ICO pitches, and they're pre-vetted, and there's research behind them. There's a tear sheet, here's some information. If they show up to 2 and they don't write a check, that means that they've seen 42 ICOs and they don't invest in any of them. That's ridiculous. That's just a waste of time. So, how do these guys engage with these family offices and try to curate and vet which ones are going to actually write checks?
Sure. I mean, I think It's all about the trusted advisors, the people like Michael and myself and other people that if you've developed relationships with family offices to where that they take you at very, very seriously, very, very credibly, to where that you bring them opportunities, you get a feel for, the areas of most interest with them. That's the bridge that you get into. But, I mean, at the end of the day, you're right. I mean, they are very, very picky, and it's... a lot of it too is that they want to make sure they feel very comfortable with the management team. I mean, that's first and foremost.
Well, and that's the other issue. I was in a company as a CEO, and one family office kind of took over, and basically he was a very activist investor, and he didn't know what he was doing. So I basically was like, you don't know what you're doing, so why do you keep on writing checks? One, and it came down to a point where I said to myself, I was like, I can never change this person's idea of what they think is right because they just think that they're smarter, even though they were just a real estate investor. That's the way they made their money. I'm like, you've never been in fintech, but you think you're a fintech investor. So how do you deal with the fact of, like, are they more active investors? Are they passive investors? Do you want them in the ICO? Do you not want them in the ICO? Like, what are we looking at here?
Yeah, then you go to... I think the family office investor is the best investor you could ever have. Only if he's European. If he's from Asia, he's going to flip. But the European family offices keep their money a long, long time, and this industry needs those kind of investors. Buy and hold, and they will do it. They will look at, and that's why what you're saying is right. They will look at the management because they want to hold long term, right? They're not sophisticated. They're not difficult to get to. Family offices are not difficult to sell to pitch to, because they're really not sophisticated. They're looking at the human element more than anything else. I would, as a family office, I would rather buy a BlackRock fund and lose money than buy ICO and make a little bit, because I can't explain the ICO to a client, but I can justify BlackRock. It's not my fault, it's BlackRock. So we need to do that. We need to create that BlackRock identity within this industry.
And sorry, this may be a follow-up question then, I guess. Essentially, yeah. Well, sure, let's go. The BlackRock of crypto by Bicameral Ventures, stated, built on Aeon. Let's go. No, so I'm just kind of curious where all this direct investing is coming from then. If there, as we've all kind of stated, there's this big reputational angle that it's very hard to justify getting into these projects, and we haven't really seen the kind of easily understood use cases that make sense then. So I am kind of curious as to where the direct investing is coming or is going. Does anybody have a view on that?
No, I mean, I think just the opposite. The family offices that I know, that, I mean, they're looking at long term, and that's the reason why their reputation is at risk. I mean, they have so much money, they can't be, as they tell me, I mean, they can't manage a bag of crumbs. I mean, they like to put slices of money to work for long term, and the reason why that they're literally the best investor you can possibly ever imagine is that because they're in long term, they will leverage every relationship in their network to help the company in every way possible. So, there is value add on value add on value add that they bring to the table. Obviously, it increases their ROI, but at the same time, it increases the success of the company significantly because they do have vast connections. I mean, everywhere from business-wise to politically and otherwise, and it makes them significantly more valuable.
So it sounds like club deals are really popular there. It also sounds like because if you have a founder entrepreneur, that person in itself could be an advisor or sit on the board, which also lends a lot of gravitas and maybe even some actual credibility to a project which you couldn't get prior. And it's not crypto. It's a non-crypto business expert versus a crypto business expert. So are they sitting on the boards? Are they getting more? Are they like putting their face on their investments?
They should be.
Yeah. I mean, I'm not seeing a lot of. I mean, they're very, very finicky on what boards that they sit on because of the reputational risk. But if they do sit on a board, that means that they've written a sizable check, and they're definitely leaning into the deal significantly.
So from the standpoint, how much capital have you seen in the last 6 months go into crypto from family offices, from your experience?
Zero. No, I think in Switzerland or in Europe it's very, very small. Obviously, US is a bit more, and Asia is the number one. So we're seeing quite a few family offices in Hong Kong and Singapore, pushed by their clients, by the way, and they're more trading oriented, so that's why. But otherwise, when institutional money comes in, which is what everyone wants and is waiting for, I think family offices will come in a big way. They're major investors in private equity funds around the world, so there's no reason why they would not invest in this institution, especially because we're able to give them much more liquidity, or we will be able to give them more liquidity as the exchanges improve. So exit will be easier.
I mean, a lot of it, I mean, the major pushback right now is regulatory risk. And, that's the one thing that they, the worst thing they could do is invest in a deal and have it, end up on the front pages is that some scam or that the SEC unraveled the deal or something like that. But yeah, we're seeing, tens of millions of dollars go into deals, not all directly through our network, but I mean, through the deals that I'm involved in. When they would typically do 5, 10, or 15, or $20 million, they're probably doing 20% of that into the deal. I mean, sometimes I say, I mean, they do it holding their nose because they're not used to not having
a convertible note structure into a token, or are they doing?
Yeah, they're just going into the tokens, but it's because there's no shareholder rights. And they really don't know about corporate governance. I mean, there's really no corporate governance. I mean, it's management, and they really want to make sure that the management team has reputational risk, or at least a track record of success, so that it's not going to, that there is something to point to as far as that you can comfort that these people have been successful and executed in the past, opposed to just writing a check to some 19-year-old kid.
Jose, this is where the quadratic voting comes in. We can solve the whole family office problem. I wanted to flip that around as well. And one thing that I've seen in Toronto and talked to some of the local family offices there is people who have made a ton of money in 2017 in crypto are starting to put capital into family offices that's been generated through crypto. And that creates a really interesting dynamic where you're pushing from the inside, but you also don't want to just take the money that you just earned from a crazy risky asset class and redeploy it back into that asset class. So it's kind of, you get the sophistication, but you still kind of have challenges on the risk side. And maybe it's sort of you're really diversifying, and maybe you're just putting a bit in crypto and making somebody else do the work and all of that aspect to it. But I think there is a lot more flow of funds that some people do look at this as a really one-time hit that they've just made a ton of money, and let's cash out enough to send our kids to college and live forever, and then we can go play with the rest. So I think that's an interesting inflow as well.
Great. So you know what? I see some folks here who are definitely doing ICOs, and I'd like to open it up to see if they have any questions for people who are dealing with family offices all the time. I think it's a good idea too, because I see a few folks, and if they do have any questions for them, or if they want to speak to them afterwards, they're more than welcome.
If you have a question, just raise your hand and I will bring the microphone around. Any questions?
Okay,
Wow.
So I think everyone's done here. Thanks a lot, guys. Thank you, everyone.
All right, great job.